Good morning. What's up, everyone? Jordan Dove here, Monday, October 16th, 2023. It's been a while since we've been able to get a video out, but I wanted to check in with everybody, get a market update of what's going on here in our economy. We also have our October monthly market report we're going to go through. We're going to talk about the Airbnb and investor market that's shifting. There's new listings that are increasing in the slower part of the season, which is interesting. Older Americans are on the move, and home prices have actually remained pretty steady. They're not falling anymore. Also, home builders are still building like crazy, and we're going to talk about it all today on Jordan Dove's Market Pulse. All right, let's get into it. All right, so let's go through our regular format here. We're going to talk about the review of last week, and the markets have been uncertain. We have the Israel-Hamas war that's adding to Wall Street's uncertainties, but the Dow did break a 3-week losing streak. The S&P 500 scored back-to-back weekly gains, and the Nasdaq barely dipped. Somebody please make it make sense to me. Money did flow to the safe haven of bonds. It lowered Treasury yields and rates, which was good, which helped stocks, but the University of Michigan consumer sentiment sank due to high food and energy prices and inflation expectations. Wholesale price inflation rose by the PPI, and CPI consumer price inflation was unchanged. On the plus side, earnings season kicked off with good results, and the Philadelphia Fed president said the FOMC is likely done raising rates. I don't know about that. I think another quarter rate hike here before the end of the year at one of the FOMC meetings. I believe there's two more in November and December coming up. We'll see if they raise rates one more time, but sentiment is that they will not. So last week the Dow ended up 0.8%, the S&P up 0.4%, and the Nasdaq was down 0.2%, which means bonds closed out the week up overall, though the 30-year UMBS 6% finished unchanged at $97.31. And we had in Freddie Mac's primary mortgage market survey, the national average 30-year fixed mortgage rate edged up a tad. And remember, guys, rates can be extremely volatile, so check with a mortgage professional like Chuck Barone at Barrett Financial for up to the minute information, okay? Let's talk about the national housing market real quick here. Moody's Investor Services reveals new home sales made up 14 to 15% of total transactions over the last 3 quarters. That's up 10% in pre-pandemic years. So we're up 10% from pre-pandemic years in new home sales. Builders can offer those incentives. We have a client right now that got a 15-year note. They bought down that rate to 4.35%, which is really, really good right now, and also gave them $10,000 in free upgrades. So they're doing pretty well. They actually were going to sell their house that they own free and clear. They're going to take that money and pay off their new construction as well here probably in the next 6 months or so. So Moody's also projected that new home prices will dip 10% this year and 4% more in 2024. We'll see. That hasn't happened yet, but we still have a few months left in this year, 2.5 months. Analysts at nSkope report that real estate has returned to a lifestyle-driven market. Those who seemingly want more or possibly less space because they're ready to downsize and access to better schools along with job or relationship-driven moves are driving the listing inventory. Another data firm, Black Knight, is quoted as saying August marked the second consecutive months in which annual home price appreciation trended higher in every one of the 50 largest markets in the United States, mirroring the sharp reacceleration we're seeing at the national level. And we'll finish up the section with the Did You Know? The Mortgage Bankers Association reported that mortgage applications were up last week as adjustable rate mortgages demand hit 9.2% of all applications. That's the biggest share since November of 2022. Now, this segment is sponsored by Solar Oasis. We want to power your life with solar. We are now a solar brokerage and a solar installation group out here in Nevada. We actually service 13 states. If anybody is in the market to get solar, reach out to us. If you want to sell solar, reach out to us. If you want to become a brand ambassador, you will get paid $1,000 for your referral. Just go ahead to our website, solaroasislv.com. Check it out. Shoot me a text. Give me a call. Would love to talk to you about it. All right, guys, so moving into Treasury bond yields as of 9:36 a.m. Pacific Standard Time, the 1 year was sitting at 5.418%. That's up basis point. The 2-year at 5.088, that's up 3.4 basis points. The 5-year note at 4.712%, up 6.8 basis points. The 10-year 4.718, up almost 9 basis points, and the 30-year sitting at 4.881. So rates continue to rise. Looking at that 10-year edging to 5, I remember we freaked out when it went 2, 3, and 4, almost to 5%. You're going to see mortgage rates remaining elevated in that 7 to 8 range and possibly settling over 8 here as we enter into what is historically a slower real estate selling season. Median prices here in Southern Nevada. Now, back in May of 2022, we reached an all-time high of 482 on single families, and then we dipped all the way down to about 420, and here we are, 415, 420, and now here we are in October at 444. We've got back a lot of those losses. We are currently down for the month of October, down $1,000 from September. September's median was 445,000. Condos medians for October sitting at 240,000. That's up $10,000 from September. You're looking at home affordability. Condos are much more affordable in terms of monthly payments. Townhomes currently for the month of October sitting at $340,990. That's up $990 from September's median of $340. Guys, we have a total of 6,190 properties on the market. That is pretty low. We're at about 2 to 2.5 months of inventory, although we have been rising in inventory in the slower time of the season. But more sellers are opting to rent out their properties because they really can't buy and afford and do what they're doing. It's ratioing right now is very difficult. Homes, below median prices. We had a client who just purchased a home at $330,000, received $5,000 in closing costs, FHA program, 3.5% down, and the payments are $2,650 a month, plus you have $200 a month for HOA. You got all your other costs of home ownership, so you're looking at over $3,000 a month. So not the most affordable at this time. The predictions for this week: home building, existing home sales, retail sales. Analysts are predicting an uptick in home builder activity with September's housing starts report, although building permits may be down a little from August. September retail sales should continue to grow, showing consumers are still doing their bit to boost the economy, although unfortunately much of that is done on credit. Now, our tip of the week is the difference between renting and buying a home. And when deciding between buying a home or renting, think about these 3 important factors. Number 1, buying a home means avoiding rising rents. The median asking price rent since 1988 has risen substantially. When you rent, your monthly payment generally goes up each time you sign or renew a lease. When you buy, you have a fixed rate mortgage. Your monthly payment is locked in for the length of your loan, and when rates come down, which hopefully one day they will soon, you can refinance and lower those payments. Number 2, homeowners own a tangible and valuable asset. The average U.S. homeowner now has about $290,000 in equity, according to CoreLogic. And when you rent, you won't get any return on your investment as you pay your rent monthly, but your landlord will thank you. I'm a big proponent of owning investment properties. You got to start with one and then scale it from there. Now, when you buy, as the home prices rise and as you pay down your home loan, you build equity. And number 3, owning your home grows your wealth over time. A monthly mortgage payment is often considered a forced savings account that helps homeowners build a net worth about 40 times higher than that of a renter. And that was a quote from Lawrence Yun, the chief economist at NAR. So when you rent, the cost of renting goes up. It's more difficult to save money for a down payment to buy a home. And when you buy, as you build equity through the years, you give yourself your net worth a big boost. So if you're ready to enjoy the advantage of owning a home, let's connect to discuss your options. We have teams of agents and professionals all around the country that can help you. So it doesn't matter where you are, we'd love to help. Let's see if it's a good decision for you. Ending this segment with the Federal Reserve Watch. Guys, we forecast Federal Reserve policy in the coming months. Analysts appear to be even more convinced that the Fed funds rate will stay where it is. It's clear through the first FOMC meeting next year that we will not have any raises through the end of the year. We have our FOMAC meeting coming up November 1st. There's a 7.2% chance that the rate will change, meaning 92.8% probability that the rate is going to stay the same. December 13th, we have a 33% chance of that changing. And January 31st, the sentiment on Wall Street is a 34.7% chance of change. Okay, so that's it for our market recap today, your weekly inside scoop on real estate. Hope everyone's doing well. Hope you're doing great. We're going to do a separate video of our October monthly market report, so make sure you check for that video coming out tomorrow. Okay, see you guys.